Hello everyone, Modified Darvas Box here with a quick video here on Sunday. Maybe you guys are watching football games or not, but thought I'd do a real quick look at this past week. All right, before we get into it, for people who don't know who I am, basically I'm just a normal guy like you who created a system based on this investing book. It's a really good book. I think it's one of the top classics up there, and it's on Amazon. Buy it, check it out. You might learn a bunch of stuff. I saw a system buried in the pages and adopted it as my own. I look for bullish Darvas box patterns that look sort of like this, and I try to buy them. And I try to avoid or short, mostly avoid, uh, bearish Darvas box patterns that look like this. All right, so let's get into this market. It's what I call a full bull market. All all three major indexes are broken out of their Darvas boxes. They're above their weekly moving averages. Everything's moving up, and you've probably seen that in a lot of stocks you follow. But here is the comedy of this market. So many people have misinterpreted, what's coming here in the future and are out of position. I was reading Twitter, and all I'm reading about are put call ratios being low, Hindenburg omens, this market can't continue, um, all sorts of bearish arguments. The Fed, interest rate, the economy. It's incredible. And the reason why we're hearing this is because so many people out there have missed this rally or are not positioned for it properly. And that leads, you wouldn't believe actually how poorly money is managed out there. And I'm talking up the food chain, down the food chain, from the smallest guy who owns like 100 shares of this tiny stock to literally hundreds of billions of dollars under management at various places. Like anything, it's a bell curve. You have the super smart people at the top who get it at all times. Then you got the next tranche who tend to get it, but after a short little while. Then you get into the masses who just don't get it, and they don't see it, and they're late, and they miss it. And then there's the bottom tranche who just gets it wrong all the time. So as you can see in the charts, the smart people were buying uh, earlier in October, etc., because they saw this coming. In fact, you might say that smart people have been long since January and been holding through all this, but there's been a lot of turbulence here. But this is why you need a process and a methodology, something that you can apply consistently and that's repeatable over time. You apply the same methodology, the same framework again and again to analyze what's going on. I do that with the analysis of the S&P 500, which is here in this. My conclusion is that we are finishing a period of slow growth that was induced by the Federal Reserve, and now we're getting into a period of higher, faster growth. To me, this makes perfect sense when you see this on the charts. This methodology has led me to some pretty good calls in the past. This is back here, December 21st, 2018. And yes, I'm tooting my horn a little bit, but it's because of the methodology. Here's another one that same day. Because, that was a scary time. I thought the world was ending. Everybody thought the world was ending, but I was just looking at charts and looking at this data here, and I'm like, to me, it doesn't look that bad. Now, here's the latest thing in October, and this directly correlates with the change that I see here in the earnings of the market. And so I put this out there on my Twitter feed. Yeah, I think we're going into a big multi-quarter bull rally, all based on a methodology that's easy to do. And look at where we're at now. We're at a full bull market. So let's take a look here. That's the Nasdaq. Look at the S&P 500. It's broken out of its Darvas box, heading higher. And then the third index, the Russell 2000. Now, again, the Russell 2000, we need this one to participate. It's trying to join the party, but it is broken out. Broke out last week. Now it's struggling to maintain that this week. You can see it's a dogfight, but the other two indexes are already fully moving. This third one, if this one can get moving, then this market will go wow. So watch the IWM. And what's funny is we've been rallying and going higher. Doesn't mean we can't pull back or have a few bad days or anything like that. But it's just the nature, the general thrust of what's going on. Don't listen to the stupid Hindenburg omens and all that. That's just noise. And you know what? If it turns out to be true and we have some bad days, all right, then we'll just adjust and move forward. Move on. But there's a lot of fear and a lot of loud talk out there, which I think is just completely wrong. All right, let's look at the Darvas box breakouts. Again, this list, what I call textbook Darvas box breakouts. The king right now is Apple. Broke out of Darvas box way back in September, and look at that. They've made 55 points on the biggest company in the world. Wow, that's incredible. Let's look here. AMD broke out of its Darvas box here. I shaded green when it breaks out and locks in. And look at that. It took over a year for it to do that. And this was a lot of torture while the business came around to getting to where it is now. But it took a while. But yeah, it's broken out. AMRN, this drug company, got some great news. Breaking out of its Darvas box in big volume. Oh, what else can we look at? CRISP, biotech. Bio's risky, but look at it, pointing higher. DDOG, this is one of the newer IPOs. Had great earnings. Broke out of its Darvas box. Looks good. Dexcom. Look at this. Darvas box. Breakout. Big volume. Are you sensing a trend? This one. This is a rocket ship. In mode. I actually tried to buy this, and I screwed up the buy. It went down on me right away. I sold it for a loss, and then zoom, took off and left me in the dust. So when that happens, I just assume, yeah, it wasn't meant for me, even though I'm still pissed off about it. Here's the latest one, LK. Look at this giant green volume. It had earnings a few days ago. Yeah, I did. I was correct. I bought this one just because the financial numbers just look so good. Here's another NBIX. Neurocrine, it is biotech, but man, look at that. Darvas box breakout. PANW, moving higher. SE. This one moved out big time. I own this one, and I sold it. Stupid, what a dummy. I sold it before it released earnings. I missed this whole pop up. I got scared, I didn't have much cushion. It was long right in here. And I was really afraid that something would have happened and it would gap down. I just don't want to be gapped down. So I sold it, and then I watched everybody make a lot of money. It really sucked. But here's the good news. The market gives second chances. It always gives you another chance. So right now I'm watching it and looking for a spot because I may be buying this one here in the future. And one more, TDOC. Again, you see the flavor. Come on. This isn't rocket science. Darvas box breakout on big volume. Even frickin' Tesla. Look at that. Boom. Darvas box breakout, big volume. I think you're sensing a trend by now, huh? All right, let's look at what's baking. Here's the baking list, which I'm tracking. Probably the best one here, Boeing. And I've developed a thesis here that I think that the stock's really going to turn higher 6 weeks after earnings. 1, 2, 3, 4. Right now it's at 4, and already it looks phenomenal. I need to find a way to buy this. I do not own it right now. CVNA. Well, oh, come on. There we go. CVNA. I really like this one. I think it's setting up. I've always liked CVNA. I've liked it from back here in 2018, but it's a bumpy trader. It can make wicked moves, but it looks positive to me. NVTA, this one had a real nice earnings report. Now it's turning back higher. OPRA, this is a new one, reported earnings. And you know what's really cool about all these? They're above their weekly moving averages as well. See, CVNA above the weekly moving average. NVTA is going towards it. Oh, OKTA, one of the clouds, it's taking a while to get its act together, but look, it's back above the weekly moving average. And the last one here, TTD, reported earnings, good green volume, back above the weekly moving average. So this is the flavor of what's going on out there. Yeah, even a few of the avoids that I'm tracking are turning around. AMT back into the box. CRWD, wow, look at that. I don't own any CRWD, but whoosh, I have been tracking it. It went from 100 down to, what is this, 45? Now it's back to 59. That's wicked. But, you know, it's got earnings coming up here December. I will not be buying it, but I will be watching it. So this is the type of stuff. This market is getting better. So I just got really irritated when I see all the bearish stuff being talked about. We're at all-time highs. Just give me a break. So anyways, that's my thoughts for the week. Hope you have a good week. If you have any questions, let me know. Talk to you soon.